Hey, folks. Welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Tuesday, July 13th, 2010. Well, here we go again, folks. Intraday video getting started with the Dow up 158 points, the NASDAQ up about 38, and the S&P 500 is hovering beautifully up about 16 and change. That's essentially 1.5% gains across the board, and this is on the back of good earnings from Alcoa. Now, again, I'll punch up Alcoa, and you can see the interesting thing about Alcoa is it's not exactly having a stellar day to the upside. It's up 12 cents after a pretty solid gap up. But again, the overall market is taking the fact that Alcoa performed decently well as a positive going into earnings from Intel after the bell today, JP Morgan later this week, Google later this week, and a bunch of other companies like GE and Bank of America. So again, all of a sudden, people are getting a little bit happier in the overall market perception on earnings based off of Alcoa. And while Alcoa, again, ran up into earnings pretty significantly, if we go to the daily chart, you can see, look at that run up, and notice how the gap up today went right to the 50 moving average, which is major resistance, and then the fall happened. It's still, again, giving us a little bit of an inkling of a positive market bias right now. So again, good move up in the markets. Now, there is a couple things and a couple issues with this market that I want to bring forward. First of all, let's flip back to the SPY. The first thing I want to just point out on the daily chart is a clear picture of where we are on the technical side of this chart. Now, number one, the hit today occurred at 109.85. That was a master level. Why? Because it's the 50 moving average. First hit of the 50 moving average really in about 2 months or 2.5 months, going all the way back to May 13th. So again, just please note that major hit of the 50 moving average. This was the last time we hit the 50 moving average. Here you got close but never quite got there. Today, again, you touched that 50, and ever since we touched that 50, the market has pulled off the highs of the day. So that's a major level you have to be concerned about in regards to where this market could possibly head as possible resistance. Now, if we flip to the intraday chart, what you can see is a clear hit of that 109.85 level, which happens to coincide with the 50 moving average on the daily chart. Notice how the market hit that, pulled back, retested, and then fell back down, coming back into this key level at the 109.25-ish level. Now, why is that 109.25-ish level important? 109.30 level. If we scan all the way back, and again, notice how far I have to go back here, but if you come all the way back to really the 23rd of June, you can see it's a gap fill. So notice how that key level is was a lot of resistance on the way up. Finally, we got through it. Then when you pull back after you confirm above it, the in-the-money stocks methodology, again, dictates you should have major support there. And I just want to draw your attention again to that gap fill level because these are key kind of disciplined levels that you need to understand as an in-the-money stocks methodology player. Okay, so there's your level, and again, if we scan back to current times, you can see very clearly what happened here. We gapped up right to that level and pulled back. Remember, the first hit is your shorting opportunity. For those of you in the chat room that we follow and give out calls to, you know first hit of a major level, 109.30, 109.25 was a good short. Notice how the market pulled back, and then after it pulled back and we took our money off the table on the short side, what did you want to do? You can look for the move up. You don't want to short that green trend line again. It's the second hit in a very short amount of time, most likely going to break. Sure enough, it breaks. You don't confirm, but what you do get is a key pattern to form here in spirit of bull flag. 1, 2, 3 pullback bars, then a couple little tails on the bottom, which again tell us that the market wants to go up, and all of a sudden the market starts to rip higher. It goes up in spirit of bull flag, pops up all the way to that 110-ish, well, 109.85 to 109.90-ish level right here, which again, for those of you on the daily chart that I just showed you, coincides with the 50 moving average. All right, so again, that's what you had to understand, and then that would be your shorting level right there for a good little scalp pullback there. You retested it, pulled back even more, and again, notice how you came right into the green line, which now, since we confirmed above it, is now a buying opportunity on the downside. You hit it, you get a bounce. Hit it again, that's usually the one you want to stay away from because it's the second hit in a very short amount of time. Still, it holds up in the light volume afternoon of this market, and the market, again, is basically trending sideways for the rest of the day here. Now, again, what are we looking for the rest of the day? I think it's very important to understand that just like yesterday, notice how yesterday was very quiet in the afternoon as we got ready for the Alcoa earnings. Same thing is now going on in this market. The market's just kind of gyrating up and down, up and down. You're really playing pinball between the 109.85 and the 109.25 level. So about, 55, 60 cent level there over back and forth as you're waiting for Intel's earnings. Intel, again, is expected to report about 45 cents in profits after the bell today, but the key is going to be not just the earnings. I mean, whatever happened in this last quarter is going to be significant, but the big thing is going to be what are they telling you about the future? I mean, everyone in this market is on pins and needles to know, are we going to go for a double dip recession, or is it just a small minor pause here before we have another leg up in this economy? And again, between Europe's issues and Asia and possible Chinese major slowdown, all these things are on consumers' minds as well as Wall Street's mind. And Intel, again, being the leader here in the tech, being one of the first leaders in tech to report, should give us a good inkling. And again, it's all going to come in their margins, also their projections out. You want to look at revenues and also their guidance going forward. So watch that very closely. That'll be out right after the close of trading today in this market. And again, just overall, folks, I think the market is just going to chop sideways here for the rest of the day. It's going to be a solid gain. I really don't expect, in all fairness, in the short-term meeting today, for us to get back above this 50 moving average. You touched it and pulled back beautifully on the daily chart. For us to get through that, I just don't think it has enough energy today ahead of Intel's earnings. So I would look for kind of the same level here, maybe even a little bit of a pullback into the close as people maybe getting a little nervous ahead of those earnings, but we'll have to see. Volume continues to be very light, and I want to point this out. Look at the last few days in this market. Look at the volume down here just dying out. And what is that telling us? It's telling us that the institutions are not involved in the upswing in this market. And again, you saw a little bit of volume on the first day of the big bounce, but ever since then, it's just died off. And you can see that really, really pausing. It's almost we're back in a normal summer right now, where people are on vacation, people are taking off, and there's just no trading going on. And again, remember, 80-90% of the trading volume in the markets occurs from black box trading programs, from institutions, essentially. So if they're not involved here, if they're not buying this up, you have to be a little wary. Just be a little cautious. Doesn't mean the rally can't go a little bit higher off of our turn date last week, which we nailed to the upside, but it does mean that you just have to be a little cautious. You want to take profits as they come, not get too greedy overall, especially with the extension move. Essentially, in a week and a half now, folks, this market is up 7 to 8%. That's a huge gain. You went from 101 at the low about a week and a half to 2 weeks ago, all the way up to today's high at just underneath 110. That's a 9-point gain, 8 and change gain, and again, basically 8% gain in this market from those lows. That's a tremendous gain for a very short amount of time, and it has to be respected in regards to looking for resistance, all right? Now, let's go back to the intraday chart. Again, market just pausing here. Let's touch on a couple stocks. What are the strong stocks of the day? The strong stocks of the day, you'd have to pick Chevron as your leader today. Chevron up $1.50 on the day. That's a tremendous move. Also, the fact that Google continues to rally. Google continues to move higher, although it's off the highs of the day slightly, making a small in spirit of bear flag here if it breaks this 20 moving average. But again, they've got their license renewed in China for doing some internet stuff over there, and that has helped really propel. Now, Google has earnings on Thursday, and one thing that you have to be interested in here is Google is now basically from a level of $435 back to about $495. So you're talking about a $60 gain in Google in just the last week and a half. That is a huge, huge gain for the stock. And you have to wonder if good earnings are now being priced in the stock. And I'd be very, very cautious going into earnings, whether you're holding it long or short, as a matter of fact. Although at this point, I would definitely not be wanting to hold it on the long side ahead of these earnings, based on the fact that it's had such a big move up into earnings. Now, if it pulled back the next 2 days into those earnings, that's a different story. If we pull back Wednesday and then Thursday and it starts to consolidate in a bullish manner, maybe it's getting ready to make another move up. But you got to see a little bit of a pullback here, in my opinion, absolutely on Google. A couple other stocks that are strong: Goldman Sachs. Financials are doing very well. Goldman and JP Morgan. JP Morgan up $1.15. Goldman Sachs up $3 and change. Finally, the financials are now participating. You add the financials to the drillers and the oil plays like Chevron and Exxon, and all four of those are strong. You are looking at a good solid rally, and we are seeing that today. Now, there is a stock that's been killed today. It's actually off the lows of the day, but that stock is Apple, AAPL. Here's your chart on that. And there is a little bit of a head and shoulders here I want to point out. I think it is significant. Take a look at this little head and shoulders pattern. Now, it's not in play yet, but it's forming more and more. Every day it seems to be forming. Here's your neckline. So again, a break of this trend line right here would probably yield a move all the way down to the 200 on Apple. That's only if it breaks this level on the charts. Again, you dumped out unbelievably. Look at this intraday chart. Look at the dump on Apple again. And again, there's problems with the iPhone and so forth, and that's really taking a chunk out of Apple. No pun intended there. But you can see, again, Apple has come off the lows of the day, although that is ultimately an in-spirit of bear flag, which could yield a little bit more downside. So again, I think at this stage of the game, the markets have had a huge huge gain over the last 2 weeks or so. You have to be in very conservative mode right now about looking for too much. Earnings again, now a lot of these earnings now have to come in at least as good as Alcoa just to keep pace, otherwise they will sell off. And at this point, as with the markets having rallied, the same thing applies. These stocks better report good earnings or you could see a little bit of a sell-off. All right, that's all for today, folks. Have a great afternoon, and I'll talk to you soon.